just need about, I don't know, maybe next week I'll be able to show that magic trick to you. Yeah, know how to be ready. It's blow your mind. No, not the it's a card trick. Well, because when I was on the plane, I had nothing else to do, so I'm like, how do you think of a magic trick? So I tried to create one. If you figure out how it's done, you'll at least be impressed how it was created. It's going to be pretty impressive. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Good, I hope. This is how you can tell. So we're financial advisors here, yada, yada. You know, we do the whole thing. You could look at our website, but how you can tell if your financial advisor is actually doing work for you or just out there doing whatever else and not paying attention, look at his hair. You can always tell by the hair. If they always have a fresh haircut, where do they find time to get a fresh haircut, right? What are you doing? How did they make time for golf and stuff? Look at this. This is a mess, right? So that's how you know I'm just here. I'm just doing work. Anyways, our show here today is, of course, to try to teach you guys a little bit about the market, talk about how things went, give you a little insight that's not biased really in any way, just share some data with you, and all that good stuff. And then tomorrow, our Wine and Wealth class we'll be doing probably still over here in the speakeasy, so we'll get that set up. And also our office trades, we now have our studio set up for that, so we'll be all set there. Back to the good old days of having other people on the show with me instead of me just rambling. I will go over in a minute. I'll show you all the positions and stuff that we have, just if you're curious. But stock market, off to the right-hand side of your screen there. A little down day. Is this the beginning of a discount? I was talking about this the last couple days. This rally here is beyond impressive in terms of an average move that the stock market can have over a 6-day period. You're talking like 0.26% or whatever I said the other day. Very small average 6-day move. And yet we have a 10% 6-day move, 7-day move, right? So way above average. No chance it continues like that. It would be the first time ever, right? I guess there's a chance, but it would be the first time ever. So when you see the markets pulling back now and maybe just chopping around and sideways and stuff, well, that's totally normal, right? It's perfectly normal for that to happen. So we look at the S&P here today. You got a little bit of a pullback because Fed President the lady, Loretta Mester, she's a Fed president, voting member, president there. She said, her exact words, I put them down here, she finds it appealing to front load some of the needed increases earlier rather than later, meaning let's increase a little bit more. Maybe another 0.5% in May would make sense instead of waiting until the end of the cycle to do that. So she's essentially just saying, I agree with Powell, let's go ahead and raise rates a little bit more. So the market's responding to that just a little bit. Bond market not responding to that, of course, because it's already priced in absolutely everything it could possibly price in for the year. And that helped the markets bleed a little bit lower. Doesn't matter where you're looking here today, you got a little bit of weakness across the board. Mortgage applications fell 8% week over week. That's not abnormal. New home sales were only 772,000. That was a miss. They were looking for over 800,000 there. Crude oil inventories actually increased by 2.5 million barrels, which is expected going into the summer season. You'll start to see draws there. Well, hopefully you start to see draws. But anyways, looking at the S&P today, you had no dip buying because we're just starting the dip, but we also had the big stocks not able to help like they were over the last couple days. This recent, the later part of this recent rally was led by Microsoft, the big names, Alphabet, Apple, which actually did try to help out today. Amazon was weaker on the day, back up to the 200-day. So all the big name stocks, FANG if you will, started to pull back just a touch, and the rest of the market was, well, we can't keep up with this. Right? So we'll just go ahead and follow these big stocks lower. So no matter where you look today, besides energy, you had stocks that were headed lower. You can look in any sector there. You want to look in like the healthcare or diagnostics area. You want to look at financials, American Express a little bit lower. Wells Fargo, I think, took the worst of it, down 4.25%. The regional banks, smaller banks, there we go. PNC off the 200-day moving average. Truist Financial also lower. It doesn't matter where you look. Netflix was one of the bigger stocks there, also falling on the day. Intuit. I could just bounce around and show you all of this. And that's okay that things are taking a little bit of a break. It's a welcome break. Now, it's kind of odd the day that it happens on because, well, today is the 2-year anniversary of the March 23rd low in 2020. So the day that we actually marked that bottom after the 36% bounce or drop. So the S&P is up as of today 100%. It's 101.75% off of those lows actually. Now imagine if during that mess, we'll zoom out here, right here, March 23rd is the actual low right there, 101.75%. Imagine if you got scared during that and you ran away, or you sold part of your portfolio, all of it, right? Look at how much you missed out on. This is likely, there's going to be some point in the future where this happens again. If you're young enough, it's going to happen many, 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 many more times. So the lesson there is, hey, shock and awe in terms of the stock market falling. When you think the world is going to end, ask yourself, why is it going to end this time? It was going to end during COVID. That was a pretty good reason. It was going to end during the financial crisis. That was a pretty good reason too. It was going to end during various wars over the years. It was going to end during the Great Depression, right? All this stuff happened. So position yourself ahead of time to take advantage of those dips if you can and not run away. That's easier to say now while things are strong. It's much harder for me to get that point home and sort of drive that point home if the market's already fallen, because then you think, yeah, you're supposed to say that, but that's your job. That's what you do. Think about it ahead of time. Now, from those COVID lows, there was actually only 9 stocks that are still negative from the COVID lows. You know that? I'm not going to waste your time with the stocks there, but nonetheless, that's what you have. You look through the S&P today, like I said, it was a bit of a stock pickers kind of area, or stock traders kind of area. Chevron a little bit higher. Anything oil related was higher because you had oil up another 4%. Sorry to hear that. All right, there's your gas prices again. Starting to rally back up there. And so that's what you have with the S&P. You look at the NASDAQ, that was down as well. It's down 10% year to date, but you've seen a total now of 40 days plus or minus 1% just this year. 40 days where we've had that. That's well beyond the norm, right? So meaning in any one day, a plus or minus gain of at least 1%. Could be a little more. Today we're down 1.3%. You get the gist of it there. In the financial crisis back in 2009, about mid-2009, that was the last time we had that many days. And that was halfway through the year, by the way. We're a quarter of the way through the year. And we're already seeing this many volatile days. So that doesn't continue. Right? When you look at the stock market, you look at the type of volatility we had, that doesn't hold itself. Volatility is just like a stock that goes too far too fast. Can't happen forever. It will pull back. Volatility is the same way. Volatility cannot remain elevated too long. It will eventually calm down and quiet down a little bit. Maybe it's the summertime sort of thing. You know, the old sell in May and go away thing? Maybe that could be the case. Anyways, looking at the Russell, that's coming off the known resistance area, working on its first little pullback there. And if you look at the Dow, that's also pulling back off the 200-day moving average. Very obvious areas for technical traders to take their shots. It leaves room for the news and the financial media to throw in some negative headlines there. These things happen. You got gold actually finally waking up for a chance. I just mentioned yesterday gold refused to participate in this most recent bounce in commodities. Well, I guess it heard me, right? Because today it started doing its thing. So did silver, up about 1.5% between the two, or total together. If you're looking at bonds, little recovery there, yields falling just a little bit, which is good news there. It's bad news for us because in our office trades, I actually tried to put on the TLT position. We tried to be long on TLT and missed it. Order did not get filled. That order was, in fact, canceled. But the 10-year is officially trading at 2019 levels. Keep that in perspective for a moment. When we say rates are going higher, I don't want to buy a house, I don't want to go finance things. Is it really that high? Right? It's a little bit higher than it was, but, you know, so what? I guess we're talking historically low rates here. So I keep hearing from people saying, I just don't think I'm going to make progress on my dreams because rates are 0.5% or 1% higher. Really? Are you going to let that stop you? I mean, that's great. You want to sit back and wait and see if it gets a little bit better, but that's a tough one there. If we look at the various sectors for the day, well, you might imagine energy was stronger on the day. Here's the XLE, almost back to highs. Energy is the best year to date. There's no question about that one there. And energy is also the best sector since the March 23rd COVID low. So just looking around, having some fun, energy's up 221.72% since hitting that COVID low. That's pretty impressive. I mean, that's an impressive little move. But looking elsewhere, anything related to oil had a good day today. Anything related to gold had a good day today. Utilities, actually, a little something here. Let's go like this. Let's see what we've got for the day. Energy and utilities were the only positive sectors on the day. The worst performers were the financials. Everything that was down was basically down 1%. Communication services down over 1%. Real estate down over 1%. That's basically the gist of how that went today. As far as our office trades go, what did we do today? We did add the Mosaic short position. I did not get the TLT position. We did sell the Dollar General. We bought it back. Dollar General was a profit for us, a very quick profit. So we took that one there, and our 2 orders for New Relic and TLT did not go through, so they will be set up for tomorrow. Here's what it looks like, by the way, if you're interested. Actually, that looks like a bit of a mess. We'll go like this and shrink it in. I won't do it to where I get in trouble and actually show all the positions, but here are all the different stocks that we have positions on at the moment. New Relic, United, Visa, the SPY, Caterpillar, Kroger, Colgate, Dollar General, Mosaic, Starbucks, Las Vegas Sands, and CVX. Looking for a pullback on CVX. But if you join us, jazzwealth.com/research. Every Monday, Wednesday, and Friday, we do that. It's free for clients. But if you just can't be a client, don't want to be a client, it's $13, and all proceeds go to support Drum Corps International, which is kicking off their season, and I'm looking forward to it. I will be in Winston-Salem. I will be in Sevierville. I will be in Winston-Salem, Sevierville, and one other place, Texas, I believe, is where we're going. So all to support a really, really cool organization there. We obviously don't set up something for $13 a month to try to make a lot of money, right? It's a bad business model if you think of it that way. And you can cancel your own subscription if you don't like it. We don't hold back on you there. New highs and lows. You got 20 new highs, 4 new lows. Tell you what, Mosaic was one of them, a little extended, so we put on a short position in our office trades there. It did hit new 52-week highs first thing in the morning and has already started to pull back. Like to see that. Sticking in the same category, you've got CF. Also hit new 52-week highs and a little bit extended. You could kind of look around this area in the agriculture space. Archer Daniels also extended as well. We talked about a few of those in the office trades. Everything else is going to be, there's some oil stocks that did hit 52-week highs. They did pull back a little bit throughout the day, but still positive. So Occidental Petroleum is one of those, still enjoying the Buffett bounce, I think they call it. And Progressive, just one of the financials or insurers, kind of in that smaller financial space, that refused to participate with the financials today. If you look at something like the XLF or the KRE, it outpaced both of those today. So still excitement over there. I'll throw in a few others for you. Hasbro's one of the new lows. There was only a handful of them. But Hasbro, this is a tough stock to trade. I don't often go play with this one. But Hasbro breaking a new lows. There was Whirlpool. Yeah, there's the other one. Whirlpool was lower, and I think Black & Decker. Yeah. So there's 3 of them. I can't remember the 4th one there. But all in all, not many new lows in the stock market right now. I'm looking at the S&P, of course. Stocks in the news, we'll start with Adobe. Adobe had earnings. They came out after hours yesterday. Adobe beats on earnings. Revenues were as expected. They lowered guidance going forward. Not a big part of their business, but that Frame.io that they bought, that actually had its best quarter ever in its entire history. And I was looking at it and I'm like, that's impressive, but did well there. Subscription revenues all better than expected. Slight double-digit growth there, so not too bad. General Mills, consumer staple stock, usually pretty quiet. The stock was higher not because they beat on earnings, which they did. They raised their guidance as well. The stock was higher because they beat on inflation. Right? Inflation not hurting them. They're able to raise prices, still seeing the demand there, and that's not hurting their demand. They even said, we see strong demand despite raising prices there, so good for them. Good for them. Got your cereals and oatmeals and whatnots. JK Solar, name of the company is Jinko Solar, but JK Solar, as everybody calls it, a little bit lower on earnings today. Revenues came in better than expected. The issue is supply chain. Right? They said it wasn't such a big deal, but the numbers don't lie, so a little bit of supply chain issue there. Winnebago hits new lows, and I don't really know why. They have a backlog of both your towable trailers, your regular trailer, I forget what they call it, your normal RVs, your water sports, backlogs, right? They did great. They're selling the devil out of these. I think the assumption is, hey, this is as good as it gets with Winnebago, and it's already trading lower because, well, oil prices and stuff like that. Hawaiian Airlines, just a little bit lower on the day, down about 3%. They said the same thing that all the other airlines have been saying. We think when we report earnings that our revenues are going to come in ahead of what Wall Street expected. Good. That's good for them. It didn't help them today, but that's good for them. If you look at American Airlines, since it said the same thing, it's basically in the same spot. Since United Airlines said the same thing, it's in the same spot. And since Delta said the same thing, they're in the same spot. So none of that helped, right? It was already obviously priced in, or we're still scared of the price of oil and people don't want to mess with it too much. Also, food prices officially climbing faster than any other time in my life, my entire life. And I'm very close to turning 40, the big 4-0. Also, the data is a little bit lagging, so it could be worse because this data that showed food prices yesterday came before the Russia-Ukraine war, right? So before wheat, right? What, a third of everything that we use has wheat involved in it in some way. And well, that's going to be an issue. You've probably seen that on TV there. Boston College actually did a report that said that those on the lower end of the income spectrum, they're already starting to stockpile food, meaning they think prices are going to go higher. I don't mean they're hoarding and they think the world's going to end, but people in the lower income end of things are saying, well, I'm just going to buy 2 and just try to keep it here, until maybe prices go higher and I can't afford it anymore. That's not cool. You know what I mean? In America, that's kind of frustrating. Anyways, I'll take your questions if you happen to have any there, and we'll see what we can do. Winnebago, lots of comments on those there. They're popular down here. They are selling like hotcakes. Every day I pass CarMax on the way home. CarMax has so many cars. Like, Cody, you got to look at this. They have so many cars when you go over a bridge so you can see into their parking lot. Not only is every parking space filled, but now they have cars parked on the rows down there. They have so many cars there. But who doesn't is on the way into work, there's an RV store. There's 2 of them. And I always pick one to look at on the way there. Every day it's a different one. And they're not moving them because now I've gotten curious. Like maybe they're shifting them around or something. They're cranking them out, the smaller ones. So good for you people. I just find it hard to want to be an RV guy in Florida. I don't get that part because if I have an RV in Florida, I can't really go south from where we're at. So the first 8 hours of my trip is always going to be in the same direction. There's just nowhere else to go. So I don't think I understand that too much down here, but hey, to each their own. And get your avocados and freeze them up and stuff. Yeah. I personally, the selfish part of me is if I were looking to buy a car or truck or something, I'm not, but if I was, I would want gas prices higher because, the bigger trucks and SUVs and stuff is kind of what I'm interested in. So I would feel like those prices would go down, but I'm happy for now. Got what I need. I got the truck that I need. I don't need anything else. Maybe the 32 Roadster I got my eye on, but I'm a different breed, I guess. Are oil stocks a good buy? Occidental. Sorry if I missed any questions. You guys were talking about Winnebago. I saw it flash by. Are oil stocks good buy like Occidental Petroleum, Exxon, and Chevron? It's very tough to want to buy these here. I would not seek out the an attempt to buy these things. Like, for example, Occidental Petroleum, right? This is an amazing move. You got lots of good news from Warren Buffett, obviously help with gas prices and stuff. It is more extended now than it normally is. So I don't want to pay 2 times over the 20-day average price. I would rather let it settle in for a while, find a better opportunity, and go from there. We can probably get rid of these lines now because that's officially broken out past that range. Duh. Yep. Somebody sold Tesla. Don't tell Harry that, man. Big trucks and a small commute. It's a good combo. Yeah, there you go. You got that. I don't have like a small commute, but I have essentially a small truck. It's right there. Park it in here. Yeah, what was big news you do for your clients now? Oh, you missed it. Last Thursday, actually did a class to go over that. And I'm going to do some videos publicly just to kind of explain it because it's it's not. It's I don't want it to sound shady or anything. I want to be able to give examples and stuff. When's the time to buy Chinese stocks? I mean, as a whole, like you're just looking at like the FXI or something. So here's the FXI is one way to look at their Asher is their A shares over there. So FXI and ASHR are kind of like their Dow and our S&P. So if you're saying Chinese stocks and you want to look at those as a whole, this is your opportunity to watch for this pullback. It would be highly unlikely that this pullback is going to go under this low. So everybody's watching now to see what kind of a break does it take, and when it starts to turn, that's where you get your next little bounce. Yep. Is today the start of a pullback? Could be. I don't know. I hope so, but I have no way of knowing. Any thoughts on laser and GPS? You bought them. You're an active little one, aren't you? Good for you. There you go. So I see I'm getting a feel for you now, right? I see the stocks that you point out. So these are highly beaten down stocks. So your timing hopefully is pretty accurate. So I wouldn't buy these personally because I don't know that this is the bottom. I would worry that there's somewhere between 17 and 11 something that is my range, and I just have to hope that right now is the time that it starts moving higher. I don't like putting money to work in that type of way. That's more speculation. You might have time to do that, but I don't like guessing that I'm somewhere near the bottom and then just sitting and watching money rot away, not doing anything as a whole, right? You can always have a stock or two that does that if you're building a portfolio, but I personally don't like those. And then the gap would be the same thing. I like that you're looking for a discount, but how do you know this is it? Like, I don't want you to get stuck and say, I've owned this thing and it's been stuck at $15, $14 for 3 months, and you could have been better off somewhere else. So nothing wrong with starting a little position there just to test the waters, but not really one for me. Yeah. You have my bets on, you got bets on the market going down. Well, yeah, in our office trades, we are really short. Yeah. So and that's going to keep getting that way. If the market's higher tomorrow, I'm just going to get more short. So we already have a list of things to look at and all that, but yeah, it's I don't blame you. Now's the time to buy quality, not speculate. Yeah, could make that argument. Yeah. Cool. How's the small cap fund review going? Still focused on that fund? Absolutely. Yep. I actually like small cap stocks myself. I've always been sort of backwards thinking in that respect. Like when everybody's looking at Netflix and stuff, I look over here and go, yeah, but let's just go look over here and look at Marine Max. I like the cool little companies that are nimble and stuff. So, yep. Trout says, I'm thinking about holding off for a few months, maybe September. That's more than a few months, but I don't blame you. Let volatility die down a little bit. Yep. There you go. Yep. You like the scalping sort of thing, huh? Definitely a stock trader's market. When volatility is higher, investors look to buy. You want to buy the best things you can, of course. Do your research and shop around, but that's your chance to buy discounts or scale into discounts. But the trader, that's their chance to get, volatility there, right? So that's pretty cool. I like that. Volatility makes the short-term trader much better than they probably really are. So very nice. Okay, I will wrap it up there and get back to work, do what I do here, and you guys enjoy the rest of your day. I appreciate you hanging out. We'll be back tomorrow, of course, to do this all over again, and our wine and wealth as well. So maybe we'll make I have an idea. We might make the wine and wealth focused on the short-term type stuff this time, because we did long-term last time, so maybe we'll do that. But you enjoy the rest of your day, and thanks for watching. See you later.